Alright everyone, so for this video I wanted to show you guys a couple of different ways that you guys can find IRL to ERL trades and just different ways that you can trade them. And yes, I did change my chart colors again, and that's only because I want to make it easier for everyone to focus. So with that being said, let's begin. Alright, so for this example we are going to start with our higher time frame. So we have a weekly fair value gap here, right? As you can see, price came down, rejected off of that weekly fair value gap. So this to me is like a strong area of support, right? I don't see price breaking past through this weekly fair value gap. And then here you can see that I have my previous weekly high marked up and price was already trading into it. So let's move on to the next part. Okay, so here we are in the 15-minute time frame. So real quick, I wanted to mark up this breakup structure here first to illustrate that we are indeed bullish. Now, I want you guys to also look at something else here. So here you can see this area right here, right? There is an order block right here. Price came down, tapped into that order block, and then we started shooting up, right? Shot up. And we also have some consolidation here in this area, right? So price consolidated, and we already know that ICT says that after price consolidates, it either expands or retraces, right? Or it can reverse. So price decided to expand, leaving this 15-minute fair value gap. Okay, so here I drop into the 1 minute. I wait for price to come down to my 15-minute fair value gap. And then I wait for price to reject off of it. And when I see that price rejects pretty strongly and quickly, and it didn't even break past the consequential encroachment or the 50% of the middle of the fair value gap, I see price creates this fair value gap. And then I set a limit order here and then stop loss under the wick, or you could have put it under the fair value gap. And I targeted this 1 minute high right here. Now you could have just also, and this would have been a little more risky, but what you could have also done is left a limit order here on the 15-minute fair value gap and just simply wait for price to tap in, and then you could have just targeted that 1 minute high as well. Now there's plenty of other ways that you guys could have entered. You could have also waited for some kind of inverted fair value gap on an even lower time frame. You could have waited for a candlestick rejection from the fair value gap like we had here, right? This bullish engulfing candle. You could have entered on there as well. There are many ways to trade IRL to ERL, and I'm going to show you another example of another trade that you guys could have taken. Alright, so for this example, we are also going to start with our higher time frame context here. So we're going to use a weekly order block, right? So with this weekly order block right here, price came down, rejected off of it immediately, came up, and then created a weekly volume imbalance. Price came down, respected the imbalance, and then started going up, right? So we can now safely determine and say that price should not retrace past this weekly volume imbalance, nor should it trade past this small order block, right? So we have another small breakup structure here, and then price is coming down to fill in this fair value gap, right? So what we can expect is for price to keep targeting more higher highs, right? So we expect this weekly fair value gap to be respected and for price to move up to the weekly high to take out some of that liquidity. All right, so now you can see here that price on the 15-minute time frame tapped into that weekly fair value gap. So we're in that weekly fair value gap, and price is having a hard time breaking through it. So what do we see here? We see a breakup structure here. Price comes down, taps into this 15-minute order block, goes back up, breaks some more structure here, right? Taking out this small internal high, comes down, does not break past this low, and then keeps going up, and then finally creates another breakup structure. Price comes down, leaving some liquidity up here to be targeted next, and price is actively rejecting from this order block as well. All right, so by the way, I believe this is copper that I am using an example from, just in case you guys were wondering. So price was coming down, right? Rejected off of that order block. So we wait for our kill zone time to hit and align. Price comes down, taps into that order block again, and it's respecting it. And then we have what? An inverted fair value gap. So just so you guys can see that there's many ways that you can apply IRL to ERL with different other methods, different other entry points. It doesn't have to be just limit orders or just unicorn models. It could be many, many, many other ways. So price inverts that fair value gap here. You see that a bullish candle. I entered off here, stops at this low. I really could have put my stop under this low as well, would have been fine. And then I simply target that 15-minute high. And I believe I was on the 1 minute time frame where I scaled down to enter into my trade. But I could have targeted a 1 minute high as well, or I could have just kept targeting the 15-minute high and then another 15-minute high. But obviously I don't want to be too greedy. So let me go and show you guys one more example, and hopefully it'll be a little bit more interesting. All right, so for this example, I will be using Tesla. Now you might be wondering, why are you trading Tesla? Well, I want to show you that this form of trading can apply to literally anything. It can be applied to any market at any time, at any moment. So as you guys know, I like to align my pitch fan with the fundamentals of the asset that I'm trading. And as you can see, Tesla is fundamentally a bullish asset, or at least for now it's a little bullish. It hasn't been doing too well. But anyways, so I marked up my pitch fan as close as I can to most recent price action. So I marked it up from this low, and then from this high, and then from that low. As you can see, price has been reacting pretty well to the lines. So now I'm going to move down to a lower time frame. Okay, so now I drop down to the 15-minute time frame. Now you might be saying, wait a minute, that's not how you trade IRL to ERL. What the heck are you doing? Guys, there's so many ways, like I keep telling you guys, to trade. You just gotta back test. You gotta put the time into this kind of stuff. All right. So I'm only going to be looking at the most recent 4 to 5 days or just the week. So simply marking up market structure, I can already see a break structure here. All right, and then we have another break here, and we have another break here. And this is all mainly type 1 structure. Now if you don't know what I mean by type 1 structure, just look at my advanced market structure video. But essentially, to make it as simple as possible, it's just the overall major structure. Now here we already see that price does not have any plans of going back down, right? We have our swing low here, we also have another swing low there, and we also have another swing low here. Right, so obviously price is not going to break past those swing lows anytime soon, and my theory is that price should not break past this newly formed low either, right? Because this low was very quickly created after breaking this high. So now that I know that, I will mark up this order block from here to here. Okay, so I drop down to the 5-minute time frame, and I mark out this 5-minute fair value gap. So all I want is for price to come down into that fair value gap that's also inside of my order block, and I want to see a change in state of delivery, right? So it would be a combination of a shift in trend while at the same time finding an entry. So that's another thing too. When you're looking for your entries on any time frame, you also want to target the high that's in that same time frame entry. So if I'm entering on the 5-minute, I want to target a 5-minute high. If I'm entering on the 15-minute, I want to target a 15-minute high. You see what I'm saying? So we're going to let price come down, tap into our fair value gap. Okay. Didn't completely break through it. Didn't break through it with momentum either. It barely mohawked through it, barely. So now I'm just waiting for a change in state of delivery. Okay, we got it right here in this candle. So we got that right there. I enter here. I can put my stop right here under this candle right here. And then I'll simply target that 5-minute high. And then we let price play out again. And then finally hit take profit. So that is just a couple of examples that I wanted to give you guys on how you can trade IRL to ERL. I'll be making more. And if you have any questions on it, you can also join and ask in the Discord as well. I'll do my best to answer you guys as soon as I possibly can. Okay, so I decided to add a few more extra trade examples. So here we have GBP USD. Now I'm only going to use the 4-hour chart to show you guys that you don't even need to do all that extra higher time frame framing if you don't want to. So real quick, I'm gonna mark this up right here. So what do we have? A bearish breakup structure towards the downside, right? Very clearly it's being bearish right now. And just to have this marked up, just in case, we have to be very careful because we are near that demand zone. So what do we have here? Price is still breaking some structure, or some type 2 structure here towards the downside. And right now, price is coming into that 4-hour fair value gap, and it looks like it might actually continue going down. So right now, my bias is still bearish. So we actually have a couple places that we can target, this being the overall target going from ERL or IRL and then down to ERL. Okay, so this right here is going to be our external range liquidity. We're already inside it. So the only obvious thing to do is to go down to the bottom. All right, so I dropped down to the 5-minute and I'm gonna wait for something that tells me it's time to go down for that external range liquidity. So what do we have here? We have what looks like it could have been a possible breakup structure towards the upside. So real quick, let me just change that real fast. And let me just rewind real quick too. So at first, this looks like a regular breakup structure, but we still have to wait for confirmation. So we go forward a little bit, and clearly with this strong bearish candle, this was not intended to be a breakup structure, but instead it was intended to be a sweep of that liquidity. So if we keep moving forward, we'll find our entry, which is a change in state of delivery, which we actually have here. Let me zoom in a little bit more. So we have that change in state of delivery, and I'll enter right here, then stop loss right here, since that is in the middle or near the middle of that fair value gap or that 50%. And we can target that external range liquidity, or we can simply go for a 1 to 5, and then if not, we'll go for a 2R. Nice 1 to 5 hit. And then you can either move your stop loss to break even, or you can move it up here and let price do its thing. And then finally the rest of that TP was hit. So as you can see, you don't have to use the weekly time frames or the monthly. You can just stick with the 4-hour, and then from there you can actually jump down to the 5-minute and find your entries there. So that's again another example of different ways you can trade with IRL to ERL on any asset, including futures, Forex, indices, whatever it is that you like to trade with. All right, so I'm going to give you guys one more example. Who knows, maybe there might be another one after this, I don't know. So we're just going to focus on the 4-hour, and we're going to use NOS 100 for the example. So here I have a 4-hour fair value gap marked up, and I even have this breaker block. And if you guys want to know the settings for it, this is the gone box, and these are the settings that I have that I'm currently using. So you can copy that. And so real quick, you can tell, obviously, just very simple, man. Price action is clearly bullish. All right, it's obviously bullish. You see the breaks of structure, you see price being respected, so we're good. Now if you're someone that's trading this on the futures market, you're gonna want to wait for the 9:30 open, right? So we're gonna drop down to the 1 minute here. Actually, let me speed this up just a little bit. Okay, now we can drop down to the 1 minute. Okay, so what do we have here? It's 9:30 here. Okay, so that's the 9:30 candle. And what did price do before? It swept that London high. And if you want a better visual here, here's London. All right, price swept it. Now I know that price is bullish, but there's something that you guys need to see. We can still short in bullish market structure, but you have to wait for price to say or give you some kind of high that indicates, okay, the high is finished forming. And after that high finishes forming, you can trade down into a retracement. So usually most retracements end at around the 50% level. That's the 50% level here, right? Now that's just a guideline. Now we're gonna go back to the 1 minute, and we're gonna enter a counter trend trade. And I'm gonna show you how you guys can enter those. Now, again, we're gonna go back here to that 9:30 open. And as soon as that 9:30 hits, we saw that price swept liquidity. So we're going to enter at that change in state of delivery, right? Stops above this, right? Above price that, or the high that swept the London high. And since we are going in a counter trend trade, I will not go too far up. As a matter of fact, I will only target this part of my gone box right here, right? This is the edge So it's that top piece that I'm targeting, and I'm not gonna go too far, okay? Because again, we're counter trend trading, but price swept that high, that external range liquidity, which happens to be the London high. We see that change in state of delivery here. You enter once that candle closes, stops up on this high right here, and then we let price play out. Nice. Take profit, hit, right? Super easy, super simple. Okay, so let's go over it one more time because I know some of you guys are gonna be a little confused about it. So again, we have the breaker block here, the 4-hour fair value gap. Price finishes forming that high, that small fractal high, and then we jump down to the 1 minute. On that 1 minute, what did we see? Price got swept just before the 9:30 open, right? For all you futures traders, that's what we want. We see that change in state of delivery happen right here. We entered, stops above this high, and targeted the top end of that breaker block. And look at that, TP was hit, right? Very easy, very simple, very smooth. Okay. All right, so I'm just gonna keep popping out examples, guys, until you finally get it. So this is another example on another way that you can trade IRL to ERL. So let's focus on the daily time frame using silver here. Okay, now as you can see, we have silver being obviously bullish, right? It broke out of this consolidation here. So with that, we have a fair value gap being formed, which is a good sign because there's a lot of volume being pushed towards the upside. So we drop down to the 4-hour time frame. Yes, we are going to be doing a swing trading setup here. So we have a small change of character here, and since we're on the 4-hour time frame, it's actually okay because these 4-hour candles means there's 4 hours worth of data in each candle, so they're a lot more reliable. So I set my limit order at this fair value gap right there, at the edge right there. And since I don't want to hold my trades too long, I'm simply going to go for a 1, 2, 5. Okay, so now we just let price do its thing. Bam, TP was hit, right? Easy money. So if you guys are wondering on how you can apply IRL to ERL using the higher time frame for swing trading, you can also use it in this kind of setup. And again, I will be linking all kinds of links for you guys, especially if you want to learn the IRL to ERL strategy. This is not my strategy, by the way. This is something from ICT, and shout out to Sir Pickle, since he's the one who basically simplified this strategy, and you guys can copy it. It's for free. You can check out his channel. Again, everything will be in the description down below, and you can also check out links for different backtesting softwares, and I even have some discount codes that you guys can use with it. Okay, so let's move on. All right, so for this example, we are going to be trading again from the daily time frame using the S&P 500. So real quick, price was consolidating just a little bit here, and then we finally had a break towards the upside, and then that left a daily fair value gap. So what we're going to do is we're going to drop down to the 15-minute, and we have to be mindful that for this day in particular, I believe we are going to have news. Yes, yeah. So that is on Tuesday the 22nd. So we have to let price play out to the next day. So we wait for news to hit. Finally, news tapped into that daily fair value gap. Now I want to look for a change in trend on the lower time frame so I can get in a pretty nice sniper scalp here. So what do we have here? Price tapped into it. Price failed to take out this external range liquidity. So they're here, right? And then all we need now is for something to tell us, hey, we're going towards the upside. So I want price to break this set of structure first. All right, we finally got that break towards the upside, and if you want, we can wait for a retracement into a fair value gap here, or if you want, you can either enter here, wait limit order, and you can either put your stops here or under here. I'll put it under here just to be safe, and then I'm just gonna go for a 2R. And again, if you want, you guys could have entered here as well, but you're gonna have to either go a little bit slightly above but honestly guys, at this point I wouldn't even risk it. So I'm just gonna put it like under this order block, right? That's the only thing, guys. When you enter late and when you want more confirmation, you're gonna have to end up having a bigger stop loss and a smaller risk to reward. So we let price play out. Okay, price tapped into the other one. I'll give it a sec. Okay, this one's taking a minute. All right, cool. So let me just change the colors on this so you guys know where we're at. Okay, so this one did tag us in, right? It tagged us in. That one hit TP as well. And this one, remember we entered here from this change of state delivery. So that one also ended up hitting TP. So you guys could have taken either one. It would have been up to you. But yeah, you guys would have had to hold the trade for a lot longer. So remember guys, we went on the daily time frame, waited for price to retrace on the 15-minute down to the fair value gap here, because we also had news, so we wanted to wait for news to kind of finish out. And then once news was over with, we dropped down to the 1 minute, and then we looked for signature moves that tell us, hey, we're going to move towards the upside, which we had here because price failed to take out this external range liquidity, and we had a change of state delivery here. So you could have entered off of that change of state of delivery, or you could have waited for that retracement into the fair value gap. It would have been up to you. And for this one, we went for a 2R, and here we had to go for a 1.48 or really a 1.5. So that is another example. I hope you guys are getting tired of seeing all these examples, but I know a lot of you people really love having a ton of examples. So that being said, let's move on. All right, so for this example, I'm going to use the pitch fan. Now, I drew my pitch fan from this low to this high and then to this low. And the only reason why I drew it like that is so I can get a good bit of price action here. So I also marked up this 4-hour fair value gap from here to here, okay? Because I know that on a higher time frame, the fair value gap from here and here end up combining. So we have that 4-hour fair value gap here, and this is where liquidity is resting, right? So if we're gonna go from internal resting liquidity, we're gonna have to go to external resting liquidity. So let's go down to the 5-minute. So now that we're in the 5-minute, we are going to let price play out. And let me actually turn on my kill zones here. Okay, so we saw London got swept. Okay, all right, so we saw the low of London also get swept here, right? So now we just need something that says that we're going to move towards the upside and get into our entry, which we kind of have here, right? So you could either enter there, or you could wait for price to retrace into it, into this fair value gap that I left behind here. I'm gonna put my limit order, if I could find it, this fair value gap here, stops just under this low, and then we're going to target this liquidity here. So again, you could have entered off of this close of this bullish candle, or just set the limit order there. And we're gonna let price play out. Okay, easy, right? Tapped into it, respected the fair value gap, and then went all the way up to TP. And if I wanted to go for a 2R, that also would have been possible. All right, so it's just real simple. And notice how price tapped into that fan line right here, respected the fan line after it had even swept that liquidity, and then rejected off of it, and then kept going back up, right? So it's price isn't rejecting and moving towards the upside because it happened to tap on the fan line. When price taps on the fan line and I see that it's rejecting, that confirms the validity of the fan line. Okay, so again, price isn't moving away towards the upside because there happens to be a fan line there. No. Okay, remember, price is confirming the area of this fan line. It's confirming that this fan line is valid. All right, that's how I want you to see fan lines. Okay, so this is another one that could have been taken that same day. So I want you to notice something. Okay, I'm on the 15-minute with NAS 100, and I want you to take a look at what we're seeing right now with price action. We're seeing fair value gaps getting created, right, and then disrespected, like this one was here. This one was inverted, and then what happened? Price started shooting down, leaving volume imbalances, right? Trying to tap into this gap right here. And not only that, And this is very important. This is why I say you guys need to mark up your charts. We have breakup structures towards the downside, and we have sweeps of liquidity here. So when I see a sweep and then a breakup structure towards the downside, that's telling me that price is probably going to be bearish for a while until I see something else, right? Until I see the opposite. I want to see a sweep from the bottom and then a breakup structure towards the upside, and then that would sort of give me like an 80 to 70% conviction that the price is going to shift trends, right? But right now what we do have is a sweep and a breakup structure here. And what do we have here? Again, another break of structure here. Now you guys could have marked it from this candle's wick here as well. It's up to you, doesn't really matter, as long as we're both coming to the same conclusion. And then what do we have right here? We have this bearish fair value gap. Price is coming into it and having a hard time breaking through it, and if anything, it's just mohawking over it, just slightly over it, and price is coming down, right? It's coming down, disrespecting these bullish volume imbalances. So that to me tells me that I need to be looking for shorts. So now that I know that my bias and narrative is essentially bearish and I need to look for bearish positions, so I'm going to go down to the 1 minute, and in the 1 minute, as you can see, I have price marked up here, right? It's sweeping this liquidity as well. But since I know I'm bearish, I don't need to look for anything too extensive, right? That says, yeah, we're definitely going to keep going down, because I already know we're in a bearish and sort of consolidating market structure right now. So I'm going to turn on my kill zones here. And for those of you that are trading futures, you're probably waiting for the 9:30 open, which you had around here, okay, around here. And now you're probably looking for a position to enter sell setups. So we have this sweep. Price already swept the London high. So now we're going to keep looking for an entry. And if price inverts this gap right here, we can enter off of there. Now, some of you might be saying, wait, don't we need to look for extra confirmation? Well, not really, because our confirmation, and at least in this particular example, is our 15-minute structure that we marked out already and went through, and it had already swept London's liquidity. And as you can see, it broke structure towards the downside really well. So all we need is time and price to align, which we basically already have now, right? We have the 9:30 open. We're trading during the 9:30 a.m. or kill zones, and now we just need to wait for price to invert said fair value gap. And yes, guys, I'm cherry picking these, but I'm only doing it to show you the message or demonstrate what it is that I'm trying to convey to you, right? Obviously, but I'm pretty sure some of you already took this one though. So anyways, price inverted this fair value gap. I entered here, stops at this high because price shouldn't go past it anymore, considering it already swept liquidity. And you can target this low here or this low here, but just to be safe, we're going to target this low right there. Gonna let price play out. Melting. Easy money, right? Super easy money. And that's just another way that you can combine all these different time frames, right? And obviously I think another example to show you, and then I'm gonna call it quits. I know I've been showing way too much. Okay, finally the last example, guys. Last example. I just can't stop, man. So again, marking out market structure. We have a break of structure here towards the upside. This is NAS 100 on the 1 hour time frame, and we have price is respecting the order blocks, right? It's respecting that one, reacting pretty well right towards the upside, and then again here. So yeah, that break of structure here going up, swipe some liquidity, right? Like I always tell you guys, you see that sweep, it's not a break of structure, right? We thought it was a break of structure, but clearly it was a sweep because it caused this break of structure up here. Respected this order block as it was going up to break said structure, and price is respecting the bullish fair value gaps and the bullish volume imbalances, right? And again, I'll link this indicator down in the description below. It's pretty cool. So now that I know that I need to be looking for buys, and I know why I need to be looking for buys, right? I know that we're bullish, right? The trend is bullish, and I know that price is reacting off of these points of interest. So I will now go down to the 1 minute time frame and turn on my kill zones. And this is assuming, guys, that you're trading futures and I would recommend you just stick with futures because it's safer. And you're waiting for that 9:30 open, and you're trying to look for trades during that 9:30 open, or at least around that time frame. Let's see, I don't want to go too fast, but looks like we might. Okay, so price swept the London lows. Cool. So that means we can target the New York highs. So I should need to find a reason for me to enter a trade. And again, price swept this liquidity here. We're going up, breaking structure towards the upside. So let's see if I can find something that says it's time to go. Okay, more liquidity got taken out. That's cool. Maybe if I get an inversion here, I'll enter. All right, nice strong inversion there. And then I'm gonna put my stops just under these lows. That's too big. I'll put it like right here. And we can target those New York highs. You know what? I'm gonna go for the London highs. Screw it. Let's see what we get. Perfect. Nice. 2R targeted the London highs. So guys, basically the point of this video is to have you guys understand that there's many ways to trade IRL to ERL. You just got to find your own way of trading it. You can make a trading plan around all these different time frames, but please don't make it too complicated, right? Only choose like 3 time frames max. Stick to those time frames, back test it. Stick to one pair only, starting off, master that one pair, and then move on. You can stick with S&P 500 or NAS 100 or US 30, whatever it is that you want to master, and back test it at least 300 times. I have a video talking about why you should back test at least 300 times. You should check that one out. And if there's a backtesting platform that you want to use, again, I have links in the description for all the different platforms you can use, and there's even discount codes that you can apply. And if you have any questions, just join the Discord, ask me. You know, I'll do my best to answer you guys. And there should be some links to prop firms that I do recommend to try. Again, none of this is financial advice, but remember guys, there is no one only objective way to trade. Okay, there's many ways to trade, and they all yield different results, but it's what works best for you. All right, so that wasn't too bad. Let me know what you guys think in the comments down below. And if you are trying to get in contact with me, you can also leave your questions in the comment section, or you can look me up on the Discord. I have Instagram, Twitter, everywhere guys. And as you guys know, I always like to leave you with some biblical wisdom, and this is from Sirach, chapter 2 verses 1 through 2. And it says, "My child, if you come to serve the Lord, prepare yourself for testing, set your heart right, and be steadfast, and do not be impetuous in time of calamity." And for those of you that are hard to understand, if you're going to step into a greater purpose, suffering is the entrance fee. Brace yourself. Now, with that being said, guys, as I always say, strive for progress and not perfection. With that being said, I'll see you all in the next one. Peace.